We are gapping down into Wednesday's high, basically between Wednesday and Thursday's high. So we're filling this little gap here from Friday. That seemed like we're set up to flush into 264 on the open, maybe a little bit through there. We closed on Thursday around 263.60. So for keeping with the market, buyers being in control, higher lows off of this little pullback from earlier last week, somewhere in this band, if we overshot a little bit into, I guess technically this is the technical gap fill would be to here. This is the Spencer soft gap fill. For those of you who are newer, soft gap fill basically is when a stock or the market, there's a gap and it touches the high of the range on the chart or the low. And buyers at the spot where buyers look to step in, the technical gap fill is literally this closing price right here. So the first spot I always look for is the soft gap fill. And we've got that right here in this little band. And so I want to see buyers step in here above 264. If we were to actually get an actual gap fill and then not come back up here and fail at this band, then I would start to think about recent support. But right now, the buyers in control burden is on the sellers to show that this is going to be anything more than an overnight gap that gets bought in the morning. Let's take a look at IWM. So IWM is not even close to it. Oh, I guess it's almost as soft. Wednesday's high was 146. So Tuesday and Wednesday resistance was 146. Pre-market we gapped there on Friday. A flush into this area here would be constructive. Very light volatility for IWM, which is typically significantly more volatile than the SPYs. All right, so it's light earnings day, but this will be the busiest week of the quarter. A lot of the big names reporting. For those of you who aren't familiar, you can just go onto the scanner, the S&P scanner, and click on the S&P button, and that gives you the earnings calendar, so you can see what's coming up Tuesday, Wednesday, Thursday. But it's going to be very busy coming into the end of this month. I'm going into the week, so be ready. Caterpillar. So Caterpillar bounced with the market. We want to actually look at the daily first. So had this big run in 2017 from 100 to 170. And as fears of global growth started in the last 18 months, it had a pretty big pullback. So even with where it closed on Friday, it was 20% off at a high. It had rallied back from just, first of all, the October, in a low in October, the December low, and the market was getting crushed, was higher than October. So we're showing relative strength to the S&P coming into the December low. Assuming the global slowdown in growth has already been priced in. Let's see what we rallied back here. So we rallied from 117 to 137, so about $20. Okay, thank you. Wow, that's a big guy down in the video. That's almost at 20%. So we'll take a look at that in a second. Let's see how much the video dropped. 6%. We'll get to that in a second. All right, let's finish up in Caterpillar, but that's a really good guy down in the video. So this 128 was interesting to me when I was looking at the 30-minute this morning. You can see we touched it in the pre-market, and above that, it's like, I guess 129.5, 130. Below it, 128. I put it on the sheet. I put 127. It's actually 127.5, 128, and then 129.5, 30. This is kind of like the opening band to look at. And then below that, there really wasn't anything. I didn't see anything until down here. So you can see it came into 128. This was earlier. Did pop back up to 130. Tested the 128 again. So I think our levels are pretty good there. They're definitely buying it into 128 here. I guess if they're buying it at 128 and a quarter. And seller is here. I thought that they had a big miss on EPS, which kind of shocked me there. But then they gave a guide in line for the year, so there might just be some shifting of earnings to a different quarter or something like that. I want to see where it is relative to the bounce. So the low here was 16. They're really buying it at 121. So if this gets sold today, there's really good support here. I don't think it's going to come into this area here, but this is kind of, it failed on the open, couldn't get back above 130, and it starts trending during the day. This is kind of the area. It's already down 6%, $8 so that would be about that. This would be about down 10% on the day right here at 24. I'm kind of seeing the 5-minute right now. Just it held the 28 support, pop back up, couldn't retake 130. Now it's holding lower here, 129. So they're definitely trying to crack this. That'll actually be good. If it doesn't crack by much on 128, maybe by $1 or something, then gets back above, into this area here, then we look for that reversal. Yep, AMD would get back in the video warning. So let's go to VALE, VALE. So the a dam broke in Brazil, huge tragedy. A lot of people were killed. I saw that they had their bank accounts, a certain amount of bank accounts frozen. It's similar to PCG in the sense that these just the liability, understanding what the future liability might be for these types of events. This, if we go on the multi-year, this was like a kind of below $5. Let's see. I remember trading it back in 2016, 17. It actually went all the way down to $2. You can see the last couple of years, it supported 8, and it's been supporting 12, and it's actually gapping to there right now. So it seems like there's a chance it could crack this. In fact, it was down. Well, London's open was down at $11. It was already hammered on Friday. I guess that was related to this was probably the dam breaking on Friday. So it came off from 15 down to 13, gap down to 11. So this. It's already attempted one bounce here from 12. Actually bounced earlier to 1270. Hit a lower high 1257. So sellers are definitely retaking control here. Question is, this bounce again make another lower high? Yeah. So it's going to be a pattern of like lower highs versus is this going to hold on to support here just at 12, just below 12? It's going to do a lot of volume. It only does 30 million, so it did. Looks like it did 150 million shares on Friday, but huge volume, tight spread. It's going to be pretty low risk. And then finally, the video, which warned, it's now. I mean, the morning looked really bad, and it's come off another $6 since I punched it up. Be curious to see Citron, I think, came out positive on this one like about a month ago, right? So now they're going to come out very negative. Oh boy, let's see here. Right. So this is what they came out positive in around here. Maybe it was because it was this move. There's a lot of people called long this stock, man. I mean, if it can't retake 148, this area here. Well, first of all, let's see how far it is off of the high. So it is possible that people are anticipating this. So it came off from 280. This is 50% from the high. So 140 is interesting to me. Almost at 140. It's now getting to an area where I would start to be looking for a bounce. You see the December sell-off I did. So it was here 160, went through 145, held 140 here, came back in, failed at 140. We got back up, it just went right through. This looks like some sort of news here. Maybe this was the Apple warning. So the number was 2.27. I mean, it's like an 18% warning on revenue. I said plus or minus 2%. So somewhere between 16 and 20%. It's down 13% now. I guess it could come off a little bit more than this. I mean, I guess it could come off the mid 130s, but you're going to get people bottom fishing, I think. So here was the initial reaction when they warned. Some lucky people shorted into this, 148 and 14%. So I think it's getting real close. Even if it doesn't even get back up into this area today, it's getting down enough that a bounce. It's 37 to, this is $4 right here. So again, this is going to be really in play. It's going to be risky, but it's just the sort of thing that we like to see in our business. Okay, let's see how much AMD came down with this now. So this AMD is down to 2050, which was, remember, part of their business is the graphics chips. And so with that big warning, people are expecting that AMD will add a bad number, report a bad number. People are starting to probably think about 19.5, 20 on this. Again, that's just part of the business, right? The other part is the chips. The big part is the chips that can be with Intel. It does have a tendency to overshoot. I mean, I guess people are looking to buy it here at 2050 because that was the support from Friday. What was that? I think that was our S2 on Friday, right? It never actually even got there. So yeah, I mean, playing for 2050 for a move back up to 21 is probably pretty standard, and that seems to have started already. What I'm really curious about is how strong it was and it closed strong. If this NVIDIA warning is just kind of game changer and it just even fails to retake 21, we'll see. Obviously, big news out of NVIDIA. WDC, we talked about this was gapping up a lot. It's a long-term downtrend. It went straight up on the open, then they crushed it, took out pre-market support. Didn't quite get a soft gap fill on that, quite a bit below 42, then rallied back up. I didn't even notice this. Rallied almost back up to 44 here into the close, gapping lower this morning with the market. I'm kind of curious to see if this one starts to kind of catch a bid here between 41 and 42 and starts to kind of to base here a little bit. I did think this was an overreaction initially, the gap up here, but perhaps buyers will step up to this 41.5, 42 area. It'll creep up a little bit higher from there. All right, SBUX. So SBUX gapped up, didn't really do much. And the guy who started it, Howard Schultz, said he might run for president 60 Minutes last night, which I'm assuming, I don't know, people might think that's a negative for the stock. If you're looking at the 30-minute, it just had started to move, get away from this uptrend, and now it's kind of catching back up to this. I really would start to notice it. The news, the growth story is really intact on this one. If this retakes 27 over the next, 67 over the next few days, I definitely pay close attention to it. Otherwise, $65, especially today with the weakness in the market if it flushes. And then Intel is right back down at the 46 support from Friday. So it never can hold below. So look, I'm perfectly happy to play it on the short side if you can actually show some weakness below here. With their news and the fact that it couldn't break down, well, maybe this will be enough in the video with the big warning. So I guess what you want to see on this is some weakness below 46, meaning it goes down somewhere to like 45.5 to 45.70, and then you see it pop back up and fail to retake 46, short into that, and you go from there. Let's check the video again, see how that's doing. And we'll start trading. All right, so it's stabilizing, but not bouncing. So 137 was the low here. I think top $2. I'm going to try to maybe push it to 135, 136. Okay. Again, the more it drops from 140, the better risk reward it's going to be for actually a decent bounce. So let's see, maybe it has one more down leg from here. Or it fails to have a down leg and actually starts to hold above 137.50 when you play for the move back up to into here. AMD is actually holding below 2050 now, so maybe we'll get the flush into 20 before the market even opens. All right, so it seems like it's going to be a more interesting day today now. SPYs are actually down almost 1%. Took out that 240, 263.60. Remember we bottomed at 263 on Thursday, I think it was. Actually, it was 262. All right, so that's filled. The low at the close after the close, I guess, was 263. That's how I remember that. And we were supporting there in the morning that day. We hit the 262, got back above 263. So it does seem like there's a decent chance we might flush into that now with this negativity. I did while I was talking, you buy some SPYs at 40 cents. We'll see if this starts to act, if this little 264 now starts to act as resistance. Maybe that was just enough to bring this back into play again. We shall find out in the next 90 minutes or so. As always, be patient and good luck. So Cole was on the conference call. Let's just look at the daily first. So just this massive, constant up and down 40 to 80. We've probably talked about this a bunch of times in the last few years. Just has these. Let's see when it went up there. So this was 2015. This was summer of 2018. And it has these explosive moves back up to where it topped out. Back in 2002 when the market was getting crushed, and then goes back down. This time it didn't go all the way down to 40. Maybe now with the margins contracting and the lowering of guidance going forward, maybe this is the beginning of it, doing a retest in a few months down there. But in the meantime, we have 45. I think we have a zest break. And it's just, this is 2 quarters ago. It was up here in the 70s. So this was the May quarter that gapped it down to below 60. You can see here's the 45 support that I have as S3 on the sheet. And above that, what do I have? 49. I think that was when I zoomed in. So you can kind of see when it failed here at 54, they sold it at $50 for like a week. And it broke to the downside. Went to 45 quick over a couple of days. And since it basically got back above, you see it failed here for a couple of days at 49. I guess that's how I got 49. It was consolidating between 49 and 50 for a week. Once it closed back above it, you had another consolidation and just continued the uptrend. So first thing you notice here is a lot of people bought it coming into this. And the thing that really caught my attention was the last part, which I put on in the notes, was the margin contraction. The revenue number was good. So the fact that they missed by 13%, and they guided down a lot on EPS, means that they're still getting traffic and selling a lot of stuff, but to do that, they've had to lower prices. And so that's not good. It already trades at a low multiple, but at the same time, the multiple probably trades at a 20-30% discount to the market multiple. When your margins deteriorating, your multiple contracts. So this would probably get it to like a 10 times multiple 45. So we'll see over the next couple of days. Let's zoom in, take a look at the micro view. So initial reaction took it to the 52, a little below 52, 51.75. Nice pop to 53. People shorting into this and started to form a trend. And now consolidating again, it's breaking to the downside. It's done 1.5 million shares. It's going to be really liquid. Now they're selling 51.50. Then next is, do they step down to 51? Here's technically our first is R1 here, just to give a little bit of room in case they buy it. First move is up and gets a spike into here. I guess the way I would look at it is S1 is 50. We'll see if there's a lot of bids there. 50 is a place there's usually going to be institutional bids. If the flush right on the open goes to 50 or a little bit below, and it quickly gets bought up, we'll look for a pop at least to 51. If it just goes to 51 and then within 10 minutes is below $50, they could really hammer it today. So I'm prepared for either direction, understanding that it's down 13% right now. They missed by 13%. So you can kind of see it's a good starting point for it. $1.70 ATR. So 49 to 52 is a little bit under 2 ATRs. That wouldn't be the worst starting idea for it. Okay. Home Depot. Let's see how much this is bounced. Okay, it's still bouncing. So I want you to see, this is a very different beast than Kohl's. This is extremely strong stock. We had Walmart the other day, remember? Extremely small stock. Although this is This is showing weakness from the get-go. It's at 230. So definitely everyone's long this. And below 230, you don't really have a lot. 230 is inflection. I guess 227 is our first support, but really just looking at this on the daily, kind of see it's the mid 220s where the real support is here. It's like hugging. I think coming into it was like hugging. You see this uptrend channel. It's really hugging the top half of the uptrend channel. So people very bullish coming into these numbers this quarter. Not in the morning meeting, I can't. But if you remind me in the chat, maybe at some point we'll do that. So ideally, like in a situation like this where they lower growth expectations, and it's bouncing back into an area like, I mean, this makes it. I know I put 230 as inflection because it could come into this 232 here, but what you want is something where everyone's long it from basically above 230, except for these couple of days here. Everyone's long it from above here. You want to be able to short it as close to this as possible, and try for a rollover to like to here, and then kind of see. We'll see if it has resiliency. Obviously, a pretty good bounce, very good bounce so far. It was down at 225. What time was this? 6:45 this morning. At 8 o'clock. They continue to buy it. It looks like it's starting to roll a little bit now, but it would be great if it opened right here from a risk reward standpoint. Short. Play for move to here and then kind of see what happens. Down 3.5% right now. TJX. So this one's been pretty active. Here's the 30-minute. I think this one did a stock split because I remember trading at the 80s and 90s. It's at the high. Maybe it just got a. Maybe your signal doesn't have the stock split correctly, or so the earnings were really bad and got cut in half. I think it was a stock split. Looks like a 2-for-1 based on the chart. So at the high, this one looks like it's set to break to the upside. We have to on this one. We beat by 3%. We're on the count well. I'm not sure what they're saying. I'll check that before the market opens. But you can see it's challenging the front end high. I guess this is 57.65, which I put on the sheet. This is 58.70. Not a lot of volume. But you can kind of see it spiked above the prior high. It pulled into 60. It held. They're still selling it here, like in the high 60 area. I can zoom in more for you. Okay, so when it actually spiked almost to 62, and then they're selling it here at 61. This is a pretty bad flush, and a sharp was long some from here. Got flatted. I put this one on here primarily because I think it's going to be a lot less risky than the other two retailers we have there in terms of the liquidity. Although I guess Kohl's after the initial 10-15 minutes will be very liquid as well. Home Depot will be more difficult to trade. But it's also a much different setup than theirs, right? This one has the potential to break to the upside and make new all-time highs. So you got a nice mixed bag between the three of them. And then a totally different setup and catalyst is this MDCO, which apparently had talks with Novartis to be taken over, and maybe there's some other bidders. It already was running up, I think, yesterday on rumors of that. Also, I put in the notes, Amarin is in the same space because the psychology of investors and traders is sometimes when they see someone with a company that has a similar drug might get taken over, then it will make it less likely than the other one will. I'm not sure how much people are really pricing in Amarin potentially getting taken over at this point right now. Plus, it seems like they probably would have gotten taken over by now if they were going to, at least in the near term. So MDCO is, well, you can see we marked it up and went from 30 to 50. It just recently did a retest to 50 just the other day. So in a huge gap like this, it's tricky obviously putting support levels. That's why I put 68 maybe. I was just thinking, it's like kind of the psychology people, they think, okay, it's going to get taken over. Actually, we should go to the daily. So we did this, I forget what stock we did it with a couple of weeks ago. Maybe it was Walgreens. So just to give you a sense of where the stock has been the last few years. So it's obviously on the stronger side. It was testing the all-time high, 55. 20% premium to that is 65. It's 40% premium, 77. It's pretty rich up here. Not sure how much upside from these levels. I'll check and see if analysts are said giving prices what it could get taken over at, but. It almost got to 77 here in the pre-market, which would be 40% premium above 55 where it was. Yeah, I mean, I definitely could see this getting sold up in this area here and flushing in something to the 60s. That's the trickier trade, is shorting it like where it's having a little trouble on the open and trying to capture a quick $3 to $6 down move, and kind of seeing how does it set up after that as more volume comes in. It's already done 1.5 million, so you can see one flush here didn't even get to $70. Yeah, 33% short interest helps. So I guess at this point, they sold it at 76. It starts to sell and it's holding below, I'd say 74. You play for move down to like closer to $70. The primary focus for me today was Home Depot, and you saw from the morning game plan notes that they had guided down on their growth rate. And if we take a look at how people are positioned coming into earnings, there are people buying the stock. It actually ran up ahead of earnings from below 230 all the way up into 240. So the initial reaction to the news, as you can see on this chart right here, the 30-minute, is it was gapping down below 225. And so the thought process was, as I outlined in the morning meeting, if it came back into the 232 area, there would be some people incentivized who are long from that price or higher to get out, and they'd be very thankful to be able to take sales at that price. And when people start to take sales at that price, if the stock starts to tick lower, more people might jump on, and before you know it, it will have moved back down into the support areas from the left side of the chart. So let's zoom in a more slower time frame chart. Here's the 5-minute chart in Home Depot, and what you can see is in the pre-market, they ran it up from around 7:30 in the morning from the mid-220s to around 2:30, and when the market opened, what I was looking for was a spike to around 232 to get short. Now, in this situation, what I'll do is to maximize kind of this idea, which is it could fail at 232 and then trade down to the mid-220s, is short stock around 232, look to cover some as it flushes below 230, but at the same time, while it's at 232, buy some puts. Puts are options contracts, which give you the ability to sell the stock at a specified price. And in this case, when it runs up to 232, we buy the 225 puts because they'll be very cheap, or hopefully they'll be cheap. In this case, they actually weren't that cheap because people, I guess, were concerned that the stock could maybe roll over later in the day and trade lower, but still they were cheap enough when the stock was at 232, such that over the next 10 or 15 minutes, when the stock traded down to 226, they doubled in price. We were able to take some profits and then basically hold some of the puts to see if it sells off over the next few days. And so that's how we traded the primary stock. And then the other one that I looked at, which didn't actually set up perfectly for what I wanted to do, was Kohl's, KSS. And then this one you may have noticed in the morning meeting, the news was actually much worse in this one. We kind of went over the fact that the margins are contracting. There's nothing worse in terms of a catalyst for companies when their margins are contracting. Really positive news is margin expansion. Margin contraction is not good, but we also noted on the higher time frame chart in Kohl's that the stock had already come down quite a bit, but still wasn't at the longer term support. We looked at that multi-year range from the 40s up until 80, and so there was still some more downside here. So I thought perhaps if this stock started to hold below $50 a share, over the coming days it could move down to 45, which was the support from the most recent pullback in the stock. And so in this case, the first move was actually to the downside. Right on the open, it flushed to 48. So we used that opportunity when it ran back up to around $50 a share to put on a short position. And of course, I drew that downtrend line where it lined up with the pre-market downtrend that had been established from 52. There was selling, and there was some selling at 51. And so we wanted to look to see if sellers would step back down to 50. For those of you curious, when you're shorting it to 50, the natural place to have stops is above $50.30 and $50.50. I wanted to show you one more chart in Kohl's to give you an example. I was not on the desk when this happened, but if you wanted to press something that had really bad news like Kohl's, big guide down, margins contracting, what you want to do is once it starts to hold below S2, which it did in the middle of the day, that is a spot when you get this really tight consolidation, and I kind of circled it there for you, right at the morning low. When you get that tight consolidation, this is where people who have a bearish bias intraday, they're trying to put on size, they'll use that very tight consolidation to build a big position when it breaks below that blue line, which was the morning low. And in that case, the risk is no more than 20 cents, and if it ends up going all the way down to S3, that's another $2.50 or so of downside. So I wanted to give you a quick kind of look at how I traded some of those after the morning meeting and to give you some more insights. But ultimately, the way that we're most prepared to take advantage of the market open right after 9:30 when things are moving up and down and things are moving very quickly is have those detailed plans coming into the trading day. So Netflix reported earnings after the close yesterday, and the market's initial reaction was negative. So what I'm doing as a trader is I'm sitting at my desk, I'm listening to the Swap News Service report the numbers, and every technology stock will have several types of key numbers that traders and investors are looking for to kind of key off their trades based on those numbers. In the case of Netflix, the big number is always going to be the subscriber additions and any guidance they give going forward on subscriber additions. And so they came out with a big number, but then they guided very conservatively. And so when that happens, generally the reaction is going to be down. But that's not the only thing the market is looking for. The market's also looking at, what was the cash flow? What's the cash flow going to be going forward? When all those numbers started to come out, it was pretty clear that this was not a disastrous quarter. And if initial reaction is very negative, what I'm going to do is look at the higher time frame, the multi-week 30-minute chart, and the daily chart to find spots where people are looking to buy Netflix on the cheap, because this is a very strong market leader momentum meme. And so the first trade that I took was buying a dip into $450. So I started to nibble into 460. And if you can look at this longer term chart here, you can kind of see very clearly why I was buying into that area based on the higher time frame chart. And then what you're doing when you're buying there is you want to see the support at 450, you want to see it hold, and then you're looking for generally a $10 to $20 pop off of that level. Now it turns out if the news is not actually that good, or I should say if it's perceived as bad and people are expecting the next day to be very weak, people will use that opportunity, active traders will be using that opportunity after hours to get short. But in this case, my thought process was more like, these numbers aren't that bad, they're a little conservative on the guidance. After the initial pop, let me see if it can make a higher low and perhaps trend up a little bit in the after hours. Eventually what happened was it got into the 470s, I got flat, I actually left, and I moved on to the next setup, which is what do I want to see in the pre-market the next day. So after it's bounced from 450 to the 470s, I've gone flat. I'll come in the next morning, I'll see if they roll over and test the low again. Did it hold higher? Did it bounce more in the after hours? And when I came in the next morning, basically what happened is it got into the 480s. It actually didn't get the 490, the low 490s, which there's potentially some resistance on the higher time frame. I actually tweeted out after the initial, when I caught it above 450 and it started to hold higher, I tweeted out my thought process that I thought I could move back up into the 490s for anybody who was watching it and looking for some upside. But getting back to the pre-market. So in the pre-market, it's now trading above the after hours bounce high. And so my mindset is, okay, it's now above the bounce high from the after hours. Perhaps people will do some bottom fishing because the stock is still down over $30 on the gap coming this morning, and they might push it up to 500, to 500, 510 area in between 500 and 510. And so what we talked about in the morning meeting was, okay, it's already got a pretty good bounce. We're not really expecting this to go positive because there was some negative news there in terms of the forward guidance on subscribers. So maybe on the open, we can short it above 500 and look for a fade back into the 480s. And so this trade, what we call this trade, is basically an open momentum to the downside trade. And this is, we'll actually see this in stocks like Facebook, Netflix, Tesla, Google. Whether they gap up or down, quite often on the open, you'll get a pretty good fade either way, whether it's gapping down or gapping up from whatever the pre-market high was. And so that's like just a quick momentum trade. And remember, the first 15 to 20 minutes, the term that I came up with many years ago is, I call that price discovery time period. That first 15 to 20 minutes, you get a lot of up, a lot of down. Eventually things will settle in by 10 o'clock usually, and then you'll get a better idea of, is this stock going to have a chance to trend up today or trend down today? Most stocks don't trend for the day. They kind of develop levels in the pre-market in the first 20 minutes, and they move up and down off those levels, but occasionally they'll move outside of those levels that have been established in trend. So on the open, took the trade above 1500 on the short side, it moved lower, and then eventually I was looking for it to come into 1480 to see if it would find a bid there, and perhaps work its way back up to 1500 again. But something interesting happened. As the market was selling off, buyers were stepping in around 1485, 1486, and I noted as the market made a new low that there were buyers at 1486. I shared this with traders on the desk, traders in real time, one of our tools where you can hear me kind of talk during the day as I'm trading, saying, wow, buyers are stepping in here at 1486. This wouldn't surprise me if it worked its way back up to 1500. And as I'm filming this video, it has already bounced into the 490s. I'm actually getting ready to leave for the day. But based on the accumulation that I saw there in the mid 480s, it wouldn't surprise me if it then starts to hold about 490, and eventually it could finish up at 500. I'm thinking about, I got Tesla on the brain right now, thinking if it close at 500 or perhaps even above. But the one thing that's striking to me about it is it's been a very tight range for Netflix overall. So we covered the reaction bounce play in the after hours. We covered the short on the open, because quick down move that we tend to see in momentum stocks right in the open before they find a bid. The third trade was, we talked about the buyers at 86. The fourth trade, that one that I actually took, which I kind of skipped over, was after the initial failure at 500, when it goes down into the 480s, now that my thesis is confirmed that there's going to be sellers above 500, I'll short into a retracement. And so our first resistance area on the morning game plan was 492 to 496, so I used that 496 to reshort it. Again, I'm short from above 500 on the open, look for the down move. Once I see that weakness, when it retraces back up to our first resistance area, I shorted into 496 and then use the morning support, kind of 480 to 490 to cover. And now I'm looking to see for clues which way it's going to go. And as I said, based on what I saw over the last hour, the accumulation in the 480s and now holding above 490, I believe, it perhaps can work its way back up to 500 and maybe close above there. And so those are the four trades. You can kind of see how they developed out based on the chart as well.